Hi everyone, good evening and welcome to this evening's panel discussion, which is focusing on preparing your pharmacy for end of financial year. I know that it's kind of stating the obvious that everyone's busy, but that is kind of, it's kind of important to take the time out to make sure you are prepared for the end of the financial year so that things can run smoothly and that you can ultimately focus on what you do best in your business. So I'm sure you're all very keen to get into the presentations as quickly as possible. So I'll focus on that for now and get through just a little bit of housekeeping that we have to make sure things run smoothly. My name's Daniel Oyston, and while I'm a marketer, I mostly work with small and medium businesses. Some of you may recognise my voice as the host of the Guild's PBCN podcast. So if you're not a regular listener, then jump on because there are lots of great guests and topics sharing all sorts of things to help your business and career. But tonight, we obviously have a webinar, and so I'm going to move quickly as there isn't a lot of spare time in the agenda and we need to get to our presenters quickly because, as I said before, that's why you're all here. We would love to hear from you and have you involved in the session. So that is definitely how you can get more value out of it, get the most out of it. So please post your questions in the chat at any time. Trust me, I've done loads of webinars and panel hostings in my time, and I can tell you that the presenters tonight really do love getting questions from you. So please don't be shy, just pop them in the chat at any time. You don't need to wait until the end of each presentation. In fact, if they're coming through while the presentations are going, it helps us sort of triage and get them ready for the end. However, we are on a tight time frame, so we need to be respectful of people's time. So if you have a question and you submit it, we don't get to it, I promise I'll get it to the presenters via email and they can help you out from there. And of course, no need to take copious notes because this session is being recorded and we'll make it available to you as soon as possible. Well, first off, we have Kian Garamani and Emma Brown from RSM, who know all too well that end of financial year preparation can be daunting for many, not just pharmacists. As such, they're going to spend some time here simplifying the process for you so as to ultimately minimize the stress and maximize your results for your business. The team at RSM, they understand businesses because they have worked with hundreds of pharmacy owners to ensure that their businesses are performing well and striving to achieve industry standard benchmarks. And obviously this is in addition to helping them manage their tax and accounting affairs effectively day in, day out. So welcome and good evening, Kian and Emma.
Thanks, Daniel. I'll just quickly do a quick intro. So as Daniel mentioned, my name is Kian Garamani. I'm a partner at RSM Australia and also the National Director of the Pharmacy Sector Lead. Today or this evening, Emma Brown, who's joining me, she'll be running through the presentation and getting everyone ready. And our view of presenting to you is also a bit of a general ATO scorecard in terms of how the ATO is viewing tax risk for the coming year, things to look out for. It does look at pharmacy, but also looks at your personal affairs as well outside of pharmacy to make sure you've got the whole thing covered. So without any further to wait, over to Emma.
Thanks, Kian, and thanks, Daniel. Sorry, I have the first technical issue of the day. It's coming up saying host has disabled the participant screen sharing. So I'm not actually able to share my slides if you're able to share those.
Okay, just give me 1 second. Who can share? Hosts and panelists.
Oh, maybe I've come in on.
Let's just try that, Emma. But if it doesn't work straight away, I can
Oh,
share.
here we go. No, I've got it. Awesome.
Excellent. No problem. There we go. Solved.
All right. Awesome. Hopefully you guys can see clearly.
We can.
All right. So moving on, yet Kian and myself. So as Kian mentioned, a couple of things we're going to focus on today. We're going to touch on the ATO focus areas tonight, what they're looking at end of financial year this year. A quick touch on GST and corporate health programs. Won't spend too much time there. The bulk of the time we want to spend around year-end tax planning. It's that time of year. And then a quick chat on the impact of 60-day dispensing to your pharmacies as well. So as Kian mentioned, we're not specifically focusing on your pharmacy business here. We're kind of looking at the overall picture. So some of you might have, broader structures with personal passive investment side of things, as well as yourselves personally. So a lot of the ATO focus areas this year are more on that personal side of things. So a big focus area is capital gains tax. In particular, the ATO are highlighting disposal of shares, crypto, managed investments, and investment properties. So just being mindful that there's a lot of data sharing these days. The ATO can see a lot of the times when you have disposed of things. So making sure that you're including all the proper information in your tax returns, you've got all your documentation on file to support any cost-based information and CGT calculations as well. Kind of putting your pharmacy lens on that, we are still seeing a lot of transactions and sales in the industry as well. So depending on how you're structured, there are a lot of small business CGT concessions and rollover relief that may be available to you if you are selling your pharmacy business. So just keeping in mind that as the ATO are focusing on CGT, really being mindful of going through that proper due diligence process with your accountants and your lawyers, just to make sure that you definitely are eligible to pass any of these relief concessions and you've got all your kind of paperwork ready to go. Other focus areas this year are rental property deductions and work-related deductions. So again, more of a personal lens there. Of particular note, the work from home deductions, there's been a little bit of leniency over the past couple of years of COVID of, everyone's been working from home and maybe your deduction has been roughly 2 days from week at 8 hours at the cents. And that's my deduction. From 1 March of 2023, the ATO coming out with, specifically wanting diaries or rostering requirements to prove those hours that you're working from home and a specific calculation. So just being mindful that that's something that they're looking at this year as well. Division 7A is always an important thing to look at coming in the end of financial year as well. So this is particularly important if you do have a company within your structure at any point in time. And broadly, if your company has loaned monies either to any of the shareholders or their associates, maybe to a family trust, you just need to have a look at those arrangements and making sure either we're repaying that cash back to the company, or if not, putting some strategies in place around there to make sure we're compliant with the Division 7A legislation. So one of those things might be making sure we've got all loan agreements signed and in place, which your accountants can help you out with as well. If you do have these loan agreements in place from previous years, it's just a matter of taking the time to look through what the minimum repayments are this year and making sure we're either paying those physically through cash or your accountants are managing them through minimum dividend repayments as well. Section 100A has been a pretty big focus from the ATO over the past 2 years or so now as well. Again, noting, pharmacy industry obviously has very strict ownership rules as well with the way that you structure your affairs. But broadly, if you do use a trust somewhere in your structure, whether that be on the personal side of things as well, just having a look at who that trust is distributing income to each year and versus who's spending the money and where the cash is actually going. So the ATO are trying to look at that mismatch of if the trust is distributing income, say to adult children beneficiaries, are those adult children actually receiving the benefit of the cash, or is that just going to mum and dad for personal spending on holidays and renovating their house and things like that? So we've got about a 2-year grace period where the ATO want to see that cash actually being distributed to the adult child beneficiary. And another thing to watch out here as well is distributions to corporate beneficiaries as well. So just being aware of those focus areas. Again, hopefully none of this is news to anyone on the phone call. It's been a couple of years now. A big focus has been payroll tax in the medical industry as well. So just being really mindful if you do engage contractors or locums within your pharmacy. The key message here is just having a look at the details of the contract. Essentially, back in the olden days, we used to think, oh, they're a contractor, we don't have to pay any superannuation or payroll tax or workers' compensation or anything like that. But there's been a lot of cases going through where the outcome have been in favour of the revenue officers of looking at, well, what is this actual underlying relationship? an apple is an apple, if this is actually an employee who's primarily working for you and so forth, then they're likely going to be treated as an employee relationship, and all these things you'll be liable for as well. So essentially the rule is, they're in unless they're out, and there's really strict rules on making sure they are out as a contractor. So key message here is just really have a look at the wording of those contracts and chat with your accountants and lawyers if you're unsure. Superannuation here in particular will need to be paid directly to the superannuation fund, not to the contractor or locum and then for them to direct. So just making sure you've got all your T's crossed there. Service entities, so this is a big one in the pharmacy industry as well, and a great method to utilize as well to maximize your tax across the group. But essentially, this is where you might have a trading entity where your pharmacy business is run from, and it pays fees to a service entity. And that's a fine strategy to use as long as you're considering the ATO guidelines around comparable rates and indicative rates and their profits test. So essentially, the ATO have released their guidelines on their acceptable rates for what the markup is on, and it's different depending on whether it's labour or you're having equipment hire, expense payments or rental, and then broadly having a look at no greater than 30% of the combined profits of the trading pharmacy entity and the service entity, of those profits being in the service entity. So if you pass those tests, then you're a low audit risk for the ATO. So again, it's just making sure you've got all your proper work papers there with the calculations to make sure you're keeping everything market rate and not grossly excessive, as the ATO like to call it. Briefly, GST and corporate health programs, just a flyaway comment here that there is a conception that, health services are GST free. Generally, that might be the case. However, if you do have some kind of contract with a corporate health program, the parties can agree to not treat the supplies as GST free, so you may need to remit GST in your BAS. So again, just a reminder to double check your agreements to make sure that there's no clauses along those lines and you are being compliant with the GST legislation so you don't get caught out there. Jumping into the fun stuff, the tax planning. So this is a great time of year to have a look at, how the business has performed year to date up to May, and then having an estimate of what we think it's going to look like up until 30th of June. And that gives you a really good idea to kind of plan out what's your tax going to look like, so you can budget for that with the cash flow, as well as put some strategies in place to minimize that legally as best as possible. Especially in this current environment with all the discussion around 60-day dispensing, it's a really good opportunity as well to think about budgeting for the 2024 year, having a think about how that's going to impact your business, and putting in place some KPIs and benchmarks where we can really track that and make sure we try and keep on top of preparing for those impacts to your business. So some of the considerations that we look at, and again, once you've kind of forecasted your profit for the year and what your tax is going to look like, maybe you've had, a really great year and profits higher than usual this year, and you're looking at paying more tax than you usually would. Maybe it's gone the other way. So these are some of the things we can have a think about to try and look at whether we can, the timing of when we recognize income and expenses to try and smooth that out for you. So a big one for pharmacy is making sure we conduct a stock take at 30 June every year as a minimum, hopefully more often. Not only does that help you keep on top of, stock wastage, obsolescence and theft and things like that, you're able to account for this at the lower of replacement or cost or market value. So if you can decrease the value of your stock at end of financial year, that'll give you the best tax deduction depending on how you're valuing it. Capital expenditure, so we still have those really amazing provisions in place that the ATO introduced through COVID to have an immediate tax write-off for capital assets brought on rather than depreciating them. So if you were thinking about needing to replace any kind of assets within your pharmacy, whether that be, a POS system for front of sale all the way through to kind of a robot, provided you meet the eligibility requirements, which they're quite generous, turnover of $5 billion, so a lot of people are captured, you can claim an immediate tax deduction for that rather than having to capitalize them and only depreciate them over the useful life. So that's a really good opportunity to take advantage of. Superannuation is only tax deductible once it's paid. So an easy one, if you're looking for extra tax deductions and you have the cash flow available, is thinking about bringing forward the payment of your June quarter superannuation to be pre-30 June and making sure that superannuation is received by the super funds as well. And kind of from that personal lens as well, if you want to think about maximising your personal superannuation deductions. So the threshold for individuals is $27,500 that you can get in as a tax deductible super contribution. So having a look at how much you've contributed year to date and whether you want to put some more into superannuation. Timing of expenses and prepayments, they kind of go hand in hand. So again, assuming you're counting on an accruals basis or even a cash basis, thinking about bringing forward kind of expenses if you need some extra deductions this year. And prepayments as well, provided you meet, you have less than $50 million of turnover across your whole group aggregated. If you prepay for services, as long as they fall within that 12-month period, you can claim the tax deduction straight away, as opposed to having to only claim it as on a prepayment schedule of, each month. So having a think about what expenses are coming up and whether you can bring anything forward to pay in June. Timing of CGT. So if you have any sales coming up, it's kind of, we're 3 weeks out from 30 June now, having a think about how that impacts you, if you're going to have any capital gains tax to declare in your income, or whether it's worth pushing that into the next financial year if that's allowed, depending on the timing of things as well. So just being mindful of that. As a general rule, capital gains is calculated on the exchange of contracts date, as opposed to settlement. So once you sign that contract, that's generally when they're included, unless there's some conditions precedent in the contract. It can get a little bit complicated. And then finally, just thinking about minimum dividends as well. So that discussion we had earlier on the Division 7A rules, making sure we're being compliant both with that and the minimum dividends required there, as well as having a look at your whole group structure and how everything's flowing out, and utilising everyone's taxable thresholds as best as possible, and planning for dividend payments from the company. If you do run your pharmacy in a company, so a corporate entity, there is loss carryback provisions as well. So essentially, if your company has a taxable loss, previously you would have to carry that tax loss forward to future years, and then you'd be able to utilise that to offset income in future years. But there are some temporary provisions at the moment where, if you want, you can convert that to a refundable tax offset to get the cash back now, as opposed to carrying that forward. So having a think about that as well. If any of these considerations that we've gone through do put you into a tax loss, then it's not something that generally needs to be quarantined like it would have had to in the past. So some action items before 30th of June. If you do have a discretionary trust, they will be required to prepare income distribution resolutions before 30th of June and make sure they're signed and on file. So making sure we don't forget those. And just a reminder about superannuation guarantee changes. So from 1 July, the superannuation guarantee rate is increasing to 11%. So making sure we're getting all our payroll systems ready for that change. And then just quickly preparing for 60-day dispensing. The main takeaways that we wanted to talk about here was just really being proactive and understanding how the changes are going to impact your pharmacy. So hopefully a lot of you have already had time to access and review the Strong Room or Nostradata reports and see the financial impact to your pharmacy. And then it's kind of planning for the future of how we can try and mitigate some of that financial risk. So the first thing being inventory, just having a look at calculating your appropriate stock turn levels, having a look at your stock lines. Is there anything there that's non-productive that you can get rid of and think about not bringing in again? Having a look at the critical clauses in your lease. So do you have any rent reviews coming up? When's the expiry date of your lease? Are there options to renew? Practically having a look at the space in your pharmacy. How are you utilising the front of shop area? In the lease clauses, what are your core productive trading hours? And thinking about whether you need to start engaging with your landlord on reducing rent if possible. We've been helping some of our clients with those discussions even throughout COVID, so it's nothing new. So engaging assistance from your advisors if you need help with that as well. Once you've had a good look at the lease, the next thing would be looking at rostering and just syncing that with your lease as well. So once you've had a really good think about your core trading hours and whether we need to redefine those with these impacts, how does that align with your roster? Do we need to make some serious calls there? Having a good think about the CPA programs, if there's any that you're not utilizing that perhaps you could be to help replace some of that lost income. And importantly, just kind of your communications with the bank as well. Once you've gone through all these steps, you can have a good think about how any bank covenants are going to be impacted. We've got Ben and Belinda on the call here, which will go through, I'm sure, from their perspective as well, what they'd be looking to have conversations about, but just keeping that line open so that we can get everyone working together. And finally, seeking assistance from your advisors if you need any help as well. So that's all I had on my end. Hopefully we've got a little bit of time for questions that have come through.
Yes, I've got one question here. I've lost it. Hang on. Where's it gone?
I've got it here if you like.
Oh, no. Yeah, so it says, with the diaries on the working from home point, are there any easy tools that can be used, or is it just as simple as a spreadsheet? And then also, if I am correct, with a vehicle log, it just needs to be a sample size of 3 months. Is that the same with the use of home office, or is it a little bit different?
Yeah, so it can be as simple as an Excel file, just tracking your dates, that's fine. The vehicle log, yep, that's right, where you just need a representative 12-week period and then that lasts for 5 years. But with the diary, the ATO are actually wanting to see that week on week. It's not really a representative period thing for them. So that's a change that's come in from March. Yeah, so they've given you the leniency from July to end of February to do that really high level calculation, but from March, they'd be expecting to see those diary entries.
Okay, there's a second one here. Is the capital expenditure incentive available in 2023-24, or does it end this financial year?
The latest I've seen is this financial year, subject to, these things have been rolling on for a few years now and kind of getting better and better. So depending on what happens with the budget next year, but at the moment it's this financial year.
Very good. Well, that pretty much covers all the questions, unless you had anything you wanted to add.
I might, if it's okay with you, Daniel, I don't think
Sure.
I can post anything on the chat to everybody, but I might share a link with you. Just a little bit more information on the 60-day dispensing policy that's coming out. We've just put together a report around sort of what it actually means and some of the nitty-gritty of what's involved in it. So I might share that link with you for you to share it with the attendees, and they can peruse on that at their own leisure.
Yeah, and I'll drop that in the chat. I've just seen your note, Kian, about not being able to respond. I'm not really sure what the settings are in the chat, but if you send that to me on the email, I'll drop it in the chat while the next presentation's going on.
Thank you.
Very good. All right. So our next presenter is Mary Ibrahim from Meridian Lawyers, and Mary's going to speak to us about how to strengthen your staff retention and compliance processes leading up to the end of the financial year. And Mary's also going to share her insights on performance reviews, classification level assessments, wage reviews, and incentives. And Mary has a specialisation in employment law and workplace relations, and she's been doing that since 2016, specialising. And she represents national clients in the pharmaceutical, dental, childcare, veterinary, medical, retail, and professional service sectors. And she also has extensive litigation experience in unfair dismissal, general protection, discrimination, sexual harassment, and bullying claims. And so that means she gets to regularly appear before the Fair Work Commission, the Federal Court, the Federal Circuit Court, and state and federal discrimination tribunals. So good evening and welcome to you, Mary.
Thank you. I'm just trying to share my screen, but I think the previous presenter still has theirs shared, maybe Emma, so it won't let me share it.
Let me see if I can sort that.
I'll put here, I'll just change it to multiple participants can share, and then Mary, if you kick off and Emma can hit stop sharing.
There we go. Yeah.
Yeah.
Alrighty. Yeah, okay, I think I got it. There we go. Yes, I
There we
think you
go.
can all see the screen.
We can, thank you.
Perfect. All right. Look, thank you for that introduction. So look, now is a really good time for you to take a few looks into your business with the end of the financial year creeping up on us quite quickly. We do suggest that it is a good time to review your staff, their performance and payroll systems. Now, the 4 key topics that we'll look at tonight will include performance reviews, wage reviews and enterprise bargaining, incentive bonuses, and also policy reviews. So we'll start off with looking at performance reviews. Now, generally speaking, our performance reviews are important because they do set the tone for your staff in the new financial year, and it does give them goals to work towards, which in turn does help improve your business. Leading up to the end of the financial year is generally a good time to start the reviews and to think about everything that you want to put on track for the new financial year. So a few steps that you can take to assist you with this would include, firstly, preparation. So do some research. What do you know about your individual employees and what do you expect from them? Once you've got all the groundwork covered, it is then best to arrange a face-to-face meeting with them. We do recommend that it is done in person because it's more personal that way, and try to avoid over the phone if possible. It doesn't create the same type of atmosphere and doesn't really get that discussion going that a face-to-face meeting would. It should also be done during work hours. So when you do organize these meetings, make sure they're done during work hours and the employee should be paid to attend. It wouldn't be considered reasonable to ask the employee to stay back after their shift, for example, or stay back at an unpaid period just to attend a performance review. It's really important that you keep records of this. So ensure that you make and keep the records of the performance reviews. It will become useful for future reference. When you do look at your employee's performance review, it's really important to consider past performance management. So they need to be consistent with each other. So performance reviews are separate from performance management. So it's important that you don't confuse the two or try to intertwine them, but the consistency needs to be there. So if we're going to differentiate, a performance management is where you would sit down with the employee and specifically identify the areas of concern. You'd set down a plan for them to help improve in those specific areas, and you'd potentially regularly meet with them to look into it to see if there's any improvement or further assistance you could provide them, which is quite different from a performance review where you conduct potentially once a year. The reason why it's important for them to be consistent is because there's plenty of times where we do see an employer dismissing an employee for performance reasons, but then the employee then later produces evidence of a performance review that records that they were performing to the required standard. So that's a bit of inconsistency there for the employer, especially if you're trying to show that they weren't performing to the level they should be, but they have a performance review that says something different. So make sure you are reviewing all those past records and ensuring that they are consistent with each other. And lastly, it's important to set goals for your employees. It's beneficial for them. And we would recommend that you, when you're setting those goals, explain to them what they should work on. We would also suggest that you share business goals with the employee so they can see the greater vision, if I can use that term. So for example, if the focus in your pharmacy this particular year is on retail sales, and let's just say particularly beauty products, then you can share that with your employee, and a goal for them that they could be looking towards working is becoming more familiar with those products so they can assist you in achieving those greater business goals, as opposed to just solely focusing on individual employee goals. So it's important to have a bit of both, just so you've got the same vision there. Now, remuneration reviews. This is a big part of this time of year. And when preparing for them, there are some key matters that you should be looking at, particularly this year, because there's been quite a few legislative changes that have either just come into effect or will shortly be coming into effect. So number one thing that you should do is prepare for the 1 July award increase. So this year, the Fair Work Commission has already completed its wage review, and award wages will go up by about 5.75% on the first full pay period on and from 1 July. So it's creeping up really quickly. So definitely review your payroll and make sure the appropriate changes are made and ready to go by 1 July. The other element that you would need to look into is annualized salaries. Are they adequate? Do they cover these award wage increases that are upcoming? So the award allows you to put specifically pharmacists and level 4 pharmacy assistants on an annualized wage arrangement. So that is, instead of them receiving an hourly rate, they'll get an annual salary. However, there's some conditions around this. So firstly, the agreement does need to be in writing. Now is a very good time to check that you have those written agreements appropriately recorded, that they remain accurate, and that they cover all the matters required in clause 18 of the award. So that's the specific clause that talks about annualized salaries. So it sets out what needs to be in your written agreements, what it needs to cover. So you just need to make sure that it is all up to date. And you would also need to check that the annualized salary amount and make sure that, as I mentioned a moment ago, that it is sufficient to cover all hours of work. So for example, weekends and overtime that the employee does work, and it does take into account these upcoming 1 July wage increases. The other element to consider as well is whether you are making over award payments to your employees and how you will use them. So this particular point really comes down to how your contracts are drafted. So if you pay your employee over the award, which means that you pay them a bit more than the award minimum, your contracts should have an offset clause as a safeguard. You should also consider whether you intend for this over award hourly rate to be used to calculate penalties. So for example, would you be paying double time at the agreed over award rate, or would you be paying double time at the award rate? So it's a bit confusing, but you've got either a higher than award rate or the actual award rate. So they sound the same, but they're two different things. So if you want to use the higher rate for the ordinary time worked, then the award rate for work performed when penalty rates apply would really need to be spelled out clearly on your contract. And that's to ensure that there's no disputes or confusion in the future. So the way that your contracts are worded, particularly for that element, is really, really important. When you are reviewing your contracts as well, it's also a good opportunity to review whether there needs to be a change in duties or whether there's any other contractual terms that need to be changed. One of the main ones, which is subject to the new legislation changes that are coming in, is pay secrecy. So some contracts historically have that standard clause that say that your remuneration is to be kept confidential and not to be discussed with anyone else. The new changes in the legislation prevent pay secrecy, and they put a ban on it. So now is the best time than ever to update your contracts and remove those clauses. It's generally also the best time to make any changes to written contracts at the same time that you inform the employee of a wage increase. And that way you're ensuring that everything's all captured at the same time and that you're making any contractual changes all at once rather than dribs and drabs as you go along. Very importantly as well, confirm any changes in writing with the employee. So just to make it all, everyone's on the same page, there's no disputes, confirm it all in writing. The other element that is a new one for this year when considering remuneration reviews. Well, it's not really new, but there's been some changes to the legislation which would prompt you to look at it, is considering if a modern award is still fit for the purpose of your business. If it's not, or if there are areas that you would like to tweak, then you might want to consider finding out a bit more about enterprise agreements. Now, this one doesn't have to be rushed for the 1st of July, but increased business costs and reduction in revenue might make it worth thinking about now. So now is a good time than ever, but there's no hard and fast 1 July deadline like there are with the 1 July award increases. So just a consideration at the back of your mind if that's something that might work better for your business than a modern award. And if it is, then you can look at getting some expert advice around your circumstances and how that might be best for your business, or if there's any risks associated. The other new laws that are coming in, which would prompt you to consider when doing your remuneration reviews, is that there's some changes to how fixed term contracts are used. So historically, fixed term contracts could be used and could be rolled over and over and over. The new legislation says that fixed term contracts can now only be used for a maximum of 2 years, and that does include rolling over contracts. So if you find that your business does utilize fixed term contracts quite regularly, you will need to consider potentially moving these employees who are on the ongoing fixed contracts to permanent employment, and ensure that you are monitoring future fixed term contracts to make sure that they don't exceed the maximum of 2 years. There are some exceptions to this. So for example, trainees, employees who are over the high income threshold, or task-based contracts. So if you're in doubt and you're wanting some further information about, utilizing fixed term contracts, if that's something that you heavily rely on and what next steps would be, you can also consider speaking to Guild or seeking some expert advice in relation to that as well. So the other element that we'll be looking at is incentives. So incentives do form a big part for employees. So if this is something that you do have in your business, it's a good time to check your current scheme. So is your incentive a contractual element, or is it something that you've provided for separately in a policy? So if you do have that incentive scheme in place and it is a contractual requirement, then it's something that must be applied because it's a contractual agreement. This again will largely depend on how your contract of employment is written and what it actually says about incentive schemes. But as I mentioned, if it is a contractual requirement that isn't applied, you could be faced with a legal claim for breach of contract. So make sure that you are looking into your incentive schemes and whether they're contractual or just policies, and what your formal obligations are regarding that with respect to how your contracts are worded. Now, a lot of incentive schemes you'll see are using the word discretion. So when exercising discretion, it's something that you need to consider. So if your incentive scheme does say that the bonus is discretional, what the law says about that is that you can't exercise that discretion in a capricious way or unfairly towards an employee. So for example, if you have an employee that has met all of their targets and the requirements of the bonus, but then they recently hand in their notice of resignation, you wouldn't be able to just exercise a discretion not to pay them the bonus just because they've resigned. However, when you do look at exercising a discretion, it is different to simply doing what the policy says. So if your policy says that one of the conditions that's required in order to receive the bonus is that the employee must be employed and not be in their notice period. Then in that circumstance, you're complying with what your policy says and you wouldn't have to pay the bonus to the employee who's in their notice period. But if your policy says nothing about that, wouldn't be able to just suddenly exercise a discretion not to pay them. So the way that the policy is worded again is something for you should take the opportunity to review just to make sure it is covering all bases and just ensuring the criteria for the incentive bonus really reflects what's in practice and what you want it to reflect, and taking into account the actual use of the discretion. If you are looking at making changes to your policies and incentive schemes, it's really important to know that if it is a contractual element, so if the contract of employment says that part of their agreement is an incentive scheme, then the only way you can change that is if it's with the employee's consent. However, if it's just a policy, so if your incentive scheme is just a policy in your business and not an actual contractual term, then you can make changes more freely, as long as, again, the employment contract is quite clear on that, and it says that the policy is subject to change. So now would be, again, a good time to make those changes when you are reviewing what your business goals are for the year. So consider what it is that you would like to incentivize your employees to do and how to best put that in the written form so that it's communicated and that everyone's on the same page. If you don't have an incentive scheme, then it may be something that you'd like to think about introducing. It could be perhaps an alternative to over award payments, or it could be an incentive to introducing a change in behavior or potentially increasing sales or performance in your business. So sometimes employees are money driven, and incentive and bonus schemes do help them achieve your goal and their goal, and ensure that you are meeting your business goals for the year. So think about that if that's something that you'd like to look into a bit further. All right, now policy reviews. With the recent or upcoming legislative changes, it's a very good time as well to review your policies. And you'd need to consider that they are up to date with the legislative changes. So make sure that they're not out of date and that they do meet the new requirements. If you're not sure, consider getting an outside expert to review them for you. There's quite a few things that are happening with the Fair Work Act as of lately, so you wouldn't go astray with getting some outside expert eyes run over your policies if that's something that you'd feel more comfortable with. So we'll run through 3 of the changes that are coming up. So with parental leave, from the 1st of July, paid parental leave will increase to 20 weeks pay, and that can be shared across both parents where the birth of the child is after the 1st of July. There are some other changes, but we don't have time to go into them this evening. So with respect to parental leave specifically, do consider getting some specialist advice or talking to Guild about that if you do have some specific questions around your business and how that interacts with the changes to parental leave. Now, flexible working. From yesterday, the 6th of June, the flexible working arrangements have changed a little bit. So the reasons for an employee's request for flexible working has expanded to also include domestic violence. And that's in addition to the other standard requests that are already in place, such as carers leave or carers responsibilities. Update your policy and review your processes, because there's now a little bit more stricter process in place with what an employer must do when receiving a request. So the employers are required to review and respond to the request within 21 days. So you do need to make sure that your policies do accurately reflect what the new requirements are. There's also a little bit more clarity around unreasonably refusing the request. So with respect to that, there's also some new ability that the Fair Work Commission has. So if, for example, an employee makes a request for flexible work and you refuse it, they can actually now make an application to the Fair Work Commission about that, and the Commission can actually hold a hearing and determine if your request has been unreasonably refused, or if you haven't responded to it in the 21 days that's required. So ensure that you're familiar with those changes and that your policies reflect them. Lastly, with respect to respect at work, so there's some new laws that have come into effect back in March, so on the 6th of March. Now, with that, there's now a more positive obligation on employers to make sure that you've taken steps to prevent sexual harassment at work rather than just responding to complaints. So previously, especially in this area, what was a little bit more acceptable is that if you receive a complaint for an employee, then yes, you've got the obligation to look into it. There's now more of an emphasis and more of an obligation on you to take those proactive steps to ensure that prevent it where you can at work. So review your policies. Consider training your employees to ensure that they understand what is acceptable and what isn't acceptable, that they know you won't tolerate it, and that there's clear steps in line or clear processes for the employee to take if they want to make this complaint. And as the employer, just being a little bit more vigilant about it, and keeping an eye out for these types of matters and making sure that you are taking those proactive steps. So hold regular training sessions, ensure your employees have the policies, get them to sign off that they've reviewed and received the policy. So steps like that to show that you've taken all those reasonable steps to do what you can. And now we've got some time for questions.
Mary, I've got a question. I'm going to ask it from my own point of view, but on behalf of the attendees. I'm lucky enough to work for myself, so I'm not subject to performance reviews unless a client doesn't want to pay their bill, and maybe unless you ask my wife. But for those that are employees on this webinar, so not business owners, and they are potentially going to be the one the performance review focuses on. So they might be running performance reviews, but then also being the person that is being reviewed. What advice do you have for them to prepare for a performance review? Because I'd imagine that it could be a much smoother process if the employee is prepared, or is that something that an employer should be providing some guidance on over and above, hey, we're going to do your performance review on X date on Y time?
Yeah, look, generally you'll get notice of your performance review, so you wouldn't just be called into a meeting saying, hey, let's go in, we're going to have your performance review. Employers should first take those steps to notify employees, look, performance reviews are coming up. They'll reach out and set dates with the employees. You as the employee should also walk into it prepared, and ways that you can do that would be to look over the past year. So if you've been there for a year or more, you look at, well, what were the past goals that you have set? Did you achieve them? Why didn't you achieve them if you didn't? If there's ways that your employer can help you achieve, if there's anything different that you're actually interested in the business. So sometimes you start to develop a different direction. So you like the business, you like where you're going, but there's potentially a different career pathway that you'd like to look into. So have those points ready and prepared. Also think about what you would like to achieve in the new year coming up, so in the new financial year, and discuss that with your manager, and how they can help you work towards that if it's achievable. So there's some steps that employees can take when preparing for these meetings as well.
another question. This one says, with the respect at work, it's reasonably new. What are you seeing in terms of organisations navigating it? Are there any traps or easy mistakes that you are seeing, or any sort of teething problems?
So it's very similar to already current proactive obligations that employers have with bullying and harassment. So already it's been long-standing practice in place where employers should take positive steps to try and prevent bullying in the workplace. So it's a very similar process, except now it actually expressly expands to include sexual harassment, whereas before sexual harassment wasn't expressly like up there, even though it was just kind of muffled in, so to speak. So it's not much different to already what's in place. It's just highlighting it now more that is an element that employers should be putting a focus on. So I wouldn't say there's any teething issues. It's more including it in there as a highlighted focus with the other elements such as bullying.
Well, very good. Well, that's the one question from me, and the question that was submitted. That's you're done with questions. Well done. Thank you.
That's it. All right. Thank you.
Okay. And so our final presentation for the evening is going to look at how to leverage the relationships with your bank. This sounds very interesting, to ensure your business is on track for success. Look, as we've mentioned, or I've mentioned a couple of times, in the financial year, it's very stressful for people, for businesses, and particularly business owners. And that's in quite often large part due to the fact that you're engaging with a whole range of professionals and service providers sort of in a short period of time to try and prepare a range of reports and information and things like that around the performance of your business so you can meet your requirements. So traditionally, end of financial year has been about getting your accountant to prepare your financials and reviewing your super options and ensuring your tax obligations are being satisfied. But nowadays, end of financial year, it actually does present a fantastic opportunity for you to spend some time to leverage the various stakeholders that you are engaging with or are around at this time of year to ensure that your business is on track for success. So to that end, or to that point, Belinda Hegarty and Ben Massey from CommBank Health's National Strategy and Insights team are here to take a deep dive into how you can leverage your relationship with your bank to ensure your business is best placed on that path to success that we've spoken about so many times tonight. Welcome and good evening, Belinda and Ben, and I will now drive your slides for you. So just give me 2 secs.
While you're doing that, thanks for having us tonight, Daniel, and everyone on the call. It's great to be with you all today. We know that, you guys have a lot going on, and especially this year, more than ever, there's uncertainty out there. So what we want to take you through is just some of the things to be thinking about and when you're preparing your end of year financial information, and the conversations that you can have with your bank to set yourself up for success. Because I always say that's what we all want. We want you all to be successful. So if we can go to the next slide. In terms of these end of financial years, as Daniel said, you're going to be engaging a range of professionals. And this is really a good time of the year for that platform for those really great in-depth conversations. And we just highlighted a few things that might be there. You might be thinking about a new lease fit out. You might be trying to make the most of those new those tax breaks that Emma talked about for new asset purchases. This is a really good time to be thinking about these, but likewise understanding what your risk profile is and how that's going to continue to build the success of your pharmacy. And that's why it's really important to have those conversations with your bank to see how we can help you in your financial endeavors. I should mention we're going to talk about what we look at when we're looking and reviewing your businesses each year. And Ben's going to take us through some examples of some of the things to be thinking about in this interest rate environment, especially off the back of probably that surprising rate increase that we all saw come through yesterday. And then we're going to be finishing up talking about the 60-day dispensing changes and the conversations that would be great to be having with your bank about you know, things that you're thinking about right now. So over to you, Ben, and the next slide.
Thanks, Belinda. So from a bank perspective, the end of financial year does present the opportunity to gather those various documents and supporting information from you as the client for us to better understand how the business is performing. So the business's annual review is a yearly process that you'll go through with your bank, provided that you meet some minimum lending requirements, as regulations require banks to assess what's called your risk grade annually, which we'll cover. And consideration is given to the following items and a range of others. So how does your bank view your business? And importantly, does this align with how you want the bank to view your business? So each year, the bank has a look at this information to get an assessment on your business. It'll work through the data that you provide to put together a picture to understand what your business looks like. So as a result of this, your risk grade, which is a metric that the bank applies to determine the level of risk associated with your business and the lending to you, it may improve or it may decline. So key considerations for you are, is the bank seeing the same image as your business's health as you? So what if they're seeing a different image? How do you manage this process? And how are you educating the bank on how you're viewing your business and that two-way conversation on how you can improve the level of risk that's associated with any borrowings? So another way to look at it, we often refer to, is the annual review is similar to an annual health check on your business. And that annual review monitors realistically the health of your business. And the banker is going to be able to provide guidance back to the borrower, you as the client, on some key observation made from this annual review process, and if or how these observations will affect the relationship with the bank, the level of risk associated, and the interest rate that's charged as an ongoing effect as a result of that review. So long story short, what's in it for you? A health check on your business, as I mentioned, it gives you that certainty of capital support from your financier, which is quite important, and a lower interest rate if your risk grade is able to improve. And it gives you that access to information and best practice. So importantly, it does give you that second lens to look at your business and relative to other businesses, and the opportunity for that comparison and benchmarking opportunity. So over the next slide, when we discuss the annual review process and the information the bank requires, what are we actually referencing to here? So for those I understand that are experienced in pharmacy ownership, you would have gone through this many a times. But for those on the call that are new or an aspiring owner, we will run through just a basic indication of what we're after. So as mentioned earlier, the bank does have a regulatory requirement when the annual review must be completed by. So the bank will provide you a list of information they require for the review, usually some weeks or months ahead of the review due date. So as you can see on screen, the information ranges from financial, tax and liability statements for both the business and any director and principals, personal circumstances and borrowings, depending on how that loan or the facilities with your bank is structured. So a key call out for this evening, or a quick tip, is one of the biggest roadblocks faced throughout the process, or often what really extends this review process, is ensuring the information is provided to the bank with sufficient time to complete the review. So the earlier you can get this information through in a timely manner, whilst ensuring some key hygiene factors are in place. So for example, ensuring your ATO obligations are paid and up to date, the process will be streamlined and simpler for both parties. So over the slide.
So in terms of when we get all this information, we go through a process of that, and we like to say this is a process that the bank will go through, but it's also really good process for yourself to go. So how often are you going and reviewing your business plans? And it's a really good opportunity in this annual review process to check in on how you're going and what you can do. So we go through a 6-step process, and we encourage yourself to go through it as well. So we get the data, We compare and calculate some key ratios and benchmark those ratios. And what a great opportunity to talk to your bank, to really check in, to go, how are you going against your peers? We, identify, where there may be some challenges, where there may be some opportunities. We then would look to say, well, what are you doing to take these opportunities on? And then the final part of this process is really evaluating how have you gone? And this is where this process becomes circular. So by doing these 6 steps, you're able to continue to be reviewing your business and really learning from where you've come from. So if we go to the next slide, it's really important, though, we've talked a lot about this. This is not a one-way street. This is an opportunity, as I mentioned before, for you to be getting that information back from your bank and asking them, what are they seeing with similar clients like yourself? We've got an abundance of information through many different clients, and I'm sure myself and my peers are always happy to share this information. And this information can then be used for you as you're conducting your own business plans. So it's also really important to acknowledge that discussions that you have with your business plan, they'll change depending on what stage of the business cycle you're in. So whether you're just purchased a new store, you're looking to purchase an additional store, you're looking at what are some additional revenue streams, or likewise, how you can look at your expenses. These are all really important things to be thinking about and with your planning stage and the objectives and the initiatives that you're going to be putting into your pharmacy. So we move to the next slide. The end of financial year is a really great opportunity to really check in likewise with your business and with your business partners of how you're feeling on a risk return basis. Now, we've all probably heard the saying that often if you want high returns, it usually comes with the high risk as part of it. And when you have multiple partners in a business, it's really important to ensure that your risk and return views are aligned, because this is kind of going to guide your aspirations for your business. Now, that can change, and we'll talk later in the presentation about changes to the dispensing rules, and this might change some of your risk appetite. So it's always important to step in and to stop, reflect, talk with your partners to go, how are you all feeling about your risk appetite? So over to the next slide. As Ben mentioned earlier, when we're doing our annual review, we use this to put together your risk grade. And this risk grade has a number of qualitative things that we look at, as well as looking at your financials. So we're not just sitting there looking at financials, we take a whole raft of things into perspective. So we want to understand from for example, the patient, like what are the relationships and the deep understanding of your patients that we have. We know community pharmacy, how close you are in community, and that's something that we think about. We likewise know there's been a shift in digitalization. So have you started to shift your pharmacies to take into account some of these things? We know getting good people in pharmacy has been a challenge, and understanding some things that you might be doing is something else we might want to look at. From a process and facility point of view, we'll be looking at what's the fit out like, what equipment do you have, so robotic dispensing, etc. From products and services, we'll be looking at stock management, the cost structures that you have. And then finally, from the finance perspective, things that we'll be thinking about is equity. How much equity have you put into the pharmacy itself? How has it been performing from a financial point of view? But we also understand there's a number of external things happening out there that will affect pharmacy. And look, as I mentioned, we know there's a lot happening, but we also know the very important part that community pharmacy plays in the healthcare system. And we know that that isn't going away. So over to you, Ben.
Thanks. So on the next slide, we'll talk through a visual tool that we often use to demonstrate on a basic level how banks view and assess transactions. So it's important for me to note, though, this isn't an official tool and we just find it useful in demonstrating this process. So as you can see, the x-axis represents the risk of non-repayment on your facilities, so the overall risk associated. And the y-axis is going to show the security provided against your borrowings or any facilities. So we'll simplify here as a measure of LVR, which is the total loan you have against the valuation of the security, so your pharmacy, that's put up against that loan. So a standard pharmacy gearing at 75% LVR at acquisition is usually going to sit approximately that 4th risk grade notch and security access on the yellow markers on the screen. So on average, it's going to be approaching the higher end of a usual bank's appetite, as you can see, represented as that yellow section on the table. And where you sit in regards to risk grade and your security position is going to have an effect on the interest rate being charged on your facilities, as we mentioned previously. So at the high level, the more risk that's associated against your borrowings, and conversely, the less security you have against that risk, it means your bank is required to actually hold more capital to offset that lending to you. So it's important to ensure that your business strategy, it factors in the ability for your business to withstand any unexpected downturns in performance, which then the flow-on effect ensures you can minimize any distress that comes from industry headwinds or trade-up periods for new ventures. And it can ensure that you remain in those green and yellow areas and transition yourself away from the red area on the graph. So the important piece is to ensure that you and your bank are aligned on where your pharmacy sits. And that's an ongoing discussion is the important piece as well, which makes sure that all parties, your bank, yourself, and your financial advisors are satisfied with how any facilities or lending you have with the bank are being structured and also the pricing associated. And as we move on to the next slide, what I'd like to demonstrate is one of the critical tests or focus areas that your bank is going to assess on is what is the pharmacy's ability to meet the financial commitments associated with any facilities or borrowings. So in short, can you meet your repayments on any loans? And on the screen, we're going to work through an example of a pharmacy that's valued at just under $1.8 million. And let's use an interest rate of 6% on their borrowings. So this loan is amortized over the industry standard 15-year period. So meaning from the day it's drawn down, it's 15 years till they repay that loan in full back to the bank. There's going to be 2 key measures your bank will assess, and these can be called different things, but for the purposes of this example, we'll refer to them as interest coverage ratio and debt service cover ratio, which you can see in the yellow boxes. The difference to note, though, is the 2 measures vary slightly. So ICR, or interest coverage ratio, it actually only assesses the ability for the pharmacy to meet the interest repayments on the borrowings. And DSCR, it assesses the ability to make principal and interest repayments as well. So it's important for you to note, though, that regardless whether your borrowings are on interest-only terms or principal and interest terms, the bank is still going to conduct an assessment and will still want you to be able to show that you can meet those principal and interest repayments in the event that you need to start repaying the loan. So without diving too far into the numbers on the screen, the key call out for this evening is the effect of LVR, or that security position and the level of borrowings of the pharmacy against the bank debt. So as you can see from the example, that LVR position affects the serviceability, so the ability for the pharmacy to meet their interest and their principal and interest repayments on the borrowings. And there is that fine line between having higher debt loads against the pharmacy, which also reduces the equity required by the directors and the owners, but without putting the pharmacy under too much pressure to meet the repayment obligations associated with bank debt, and not leaving yourself those appropriate buffers in case of the industry headwinds and the trade-up period or downturn in performance. So as you can see on screen, as you shift upwards in terms of borrowings or LVR, your ICR and DSCR ratios, so your interest ratios, they actually decline with the level of borrowings as they increase. So over the slide, if we take this a step further and we utilize a standard 75% lend, so that LVR position of 75% against this example pharmacy, we can actually see the impact that one financial factor, and given the timing in the most recent announcements, we'll use interest rates for this evening, and we'll see what it has, the impact it has on the serviceability of the pharmacy. So as we know, the current interest rate environment has, and it still does remain tough for pharmacy owners who, after leading on the front line of the COVID pandemic, have now emerged to, and as of yesterday, 12 cash rate increases over the past 13 months. So this flow-on interest rate fluctuations have had a really material effect on the cash flow of pharmacies, as I'm sure you as owners will know firsthand. And as you can see in this example with the bottom table, the pharmacy's ICR has actually more than halved since the origination of their bank debt when interest rates were so low. So this highlights the need for appropriate risk management. And as we spoke about previously, shows on the risk and security matrix that appropriate buffers being allocated to your pharmacy acquisitions and ongoing management will ensure that the pharmacy has the best ability to withstand any unexpected downturn in performance. So the effect of the risk management and these buffers, as we're calling them, which is essentially just ensuring you've got room to move in terms of any interest rate movements or additional borrowings, it does allow you to minimize any distress that comes from, at the moment, industry headwinds or some trade-up periods if you're looking at new ventures. And it really can also affect, not just using this example, your ability to pay interest, but it does actually affect your other key financial indicators. So things such as your pharmacy's earnings, your EBITDA or FME, which is going to directly affect the valuation of your pharmacy. So if I can leave you on this slide with the true value of a good conversation with your bank, it may not be seen at the time. So whether that be at acquisition or refinancing, but it can quickly become quite evident down the track. And it's going to highlight the importance of appropriate debt levels and structuring. So next slide, please.
And so we understand that the end of financial period may be one of uncertainty, concern. It may be one of thinking about what's next, especially with the recent announcement relating to the 60-day dispensing from the federal government. We acknowledge the concern you might be all having, and we know there's still a lot of information to digest. So we wanted to take the last part of tonight's presentation just to highlight some of the key actions and points of conversations that you can be having now with your bank to understand some of the expected impacts and ensure that you've got the appropriate process in place with your bank to ensure that you remain on that path to success. So if we go to the next slide, we, like you, are trying to understand the same information and the impact that the 60-day dispensing change will have. And we know it's going to be different for all of you, depending on the numerous factors relating to your pharmacy. Kian and Emma mentioned great resources that are free to access, such as the Nostra data and strong room impact reports. But we understand that is only the starting point in understanding how these are going to impact your pharmacy. So there are a number of factors that will affect the financial impact. It's the loss of dispensing and also the associated front of shop revenue. So that's going to have a direct impact on your gross profit. But there are some offsets that you should be talking to your bank about. We've got the offset of indexation for the dispensing and admin fee. There's the offset of the additional scope of service and expense management. These are all going to have positive impacts to your pharmacy. So having that really open conversation with your bank is critical in order that we understand your strategy and the opportunities that you're going to be taking on to mitigate any losses that you may have in regards to revenue. Over to you, Ben.
So on the next slide, we'll talk about the end of financial year isn't just an opportunity to be assessed by your bank and, tick that box, but it's also the opportunity to utilise the information you gather and the information that's available to you to, as Belinda mentioned, identify areas of opportunity and growth, especially in the current environment. So as Emma from RSM mentioned in the presentation earlier, given the recent industry trends, some opportunities include the focus on increasing professional services and additional revenue streams. So the prioritisation of that diversification of your income sources. Expense management is going to become critical moving forward through the identification of opportunities to reduce costs and streamlining costs of doing business. It's a great conversation to be having with your accountant and financial advisor or any managing pharmacist in stores that you're actually not working in day to day. Another item that's probably not discussed as much as it should be and is emerging is workflow efficiencies that are really an emerging opportunity. So what I mean by that is, have you got the right technology and systems in your pharmacies to engage with your patients as effectively and efficiently as possible? So given moving forward, you may actually not be seeing them as regularly as you did previously. Is there opportunity with certain technology or systems that integrate, reconcile, reduce your level of manpower or wages that are required and personnel to allow you to work more efficiently, which can lead to genuine cost savings down the run? So these are just a small amount of examples of conversations you can be having with many stakeholders and advisors that you're naturally going to be engaging with during this time of the year. So over the slide, it's important to remember, though, at the end of all this, that your bank is a great source of information and market insights. So this shouldn't be limited to reaching out to your bank or your banker in times of headwind or uncertainty, as nationally, our bankers do demonstrate how the true value from your banking relationship comes from ongoing and, importantly, regular engagement, and that two-way feedback loop. So your banker is going to be having conversations with not just you or your store, but a range of clients, many of which are going to be in similar positions to you and asking the same questions you are. So now more than ever is the time for your bank to be leaning in and supporting you in achieving your business goals. So please don't be afraid to ask your banker questions on what they're seeing in the market and what feedback they're getting from other clients and industry members alike. So just as the bank looks to gain information from you, take the opportunity to gain information and insights from your bank. Over the slide, during that end of financial year process, it's important to be updating your business plan. So alongside any partners you may have in the business. Now, I know this can often be pushed to the wayside and left to next week when I have more time, but unfortunately, as we do know, next week always comes around and we just don't have more time. So if I can leave you with a final takeaway from this evening, it's really the recognition that early engagement with the range of stakeholders and professionals you and your business interacts with is critical, and it's going to be critical moving forward. And this is going to ensure that you can effectively update and implement your business plan. And importantly, it does ensure all the stakeholders are aligned with you and your strategy moving forward. On the screen, you'll see 5 of the main stakeholders you'll often be engaging with throughout your ownership journey. And your business plan and objectives, they really should incorporate feedback obtained from your ongoing and regular interactions with all of them. So over the next slide.
I just wanted to do a quick call out to the awesome range of resources that are available through the Pharmacy Guild. We look at them, we read them, and if you haven't accessed them, I really encourage you to take a look. So, because it's a great way to look at how you can leverage those industry benchmarks and insights to assist you with your own strategic business decisions. If I move quickly to the next slide, likewise, just a quick call out as well to our pharmacy masterclass series that is coming to a state near you. So please watch out for announcements coming from the Guild and ACP on how you can register and opportunities in each state. So I'd like to just finish off by saying a big thank you, and hopefully we've got time for a question or two.
Yes, I've got a couple of questions here. They're both from me, which is very exciting for everyone. But I try and think of, if there's no questions that come in, I'll try and think of some that I think might add some more value or some more insight. The first one I thought of was, what are you seeing people borrowing money for at the moment? As in borrowing money for their business. Like what are they looking to spend it on when they borrow money?
I can jump in here if you like, Belinda. So, and mainly at the moment, unless acquisitions obviously are a key part of that, and given the moment there is some significant premiums, as we know, being paid in the market, and we're really at a high watermark in terms of valuations at the moment. But if we look at the business in particular, there is a lot of investment going into what I'm referring to as efficiencies or opportunities to really streamline. So robotics is a big one we're seeing at the moment. So a lot of asset financing for robotics and really streamlining those back of dispensary options, which can therefore alleviate the pressure on staffing and labour, and it allows pharmacies to deploy their pharmacists away from the dispense area and into other services. So, you know, you can free up. We've had examples of pharmacies that have got in a robot, financed that through a bank, and then they've redeployed the pharmacist who would be at the back of the room packing to now actually doing COVID vaccinations or that additional professional services income, which is going to directly impact your bottom line.
Great answer, because you pretty much answered my second question, which was going to be around where are you seeing the money being spent where it is successful. So I might flip it and sort of change it a little bit and say, do you see people, or do you speak to people coming to you looking to borrow money to invest in their business, but you say to them, look, have you really thought that through? Or even maybe you think, look, you probably shouldn't be spending money on that because it doesn't really move the needle, it doesn't improve the value of the business, it doesn't increase efficiencies.
To be honest, not really. I mean, we don't see a lot of clients coming to us with, I guess you could refer to as anything kind of left field or outrageous in terms of new technologies. I mean, there's a lot of really high quality software and some really good robot options that are out there. So probably not in terms of your standardized. What we do see is, and this is not just pharmacy specific, but it's more, I guess, of a broader healthcare observation, is often when clients can get themselves in over leveraged positions or in a bit of distress is when they look to borrow for outside of business purposes. So for example, you know, hobby farms, vineyards were all the rage a few years ago, and you know, it was not just seen in pharmacies or, you know, the medico sector. That's probably more so where there can be the time for a really appropriate discussion with your bank. But it's more so those external outside of business investments or ventures that if, you know, the inappropriate DD is done or the not appropriate conversations with the range of stakeholders, that's where you can find yourselves in some distressful positions.
Very good. Well, I think that wraps it up. I don't think we've got any more questions. So get everybody off. For those of us that haven't had dinner, you'll get dinner 5 minutes earlier than anticipated. So once again, thank you to all the presenters tonight, Kian, Emma, Mary, Brad, and of course, Belinda. We are very appreciative of you giving up your time, particularly after hours, to share the insights, experiences, and advice with us so that we can be prepared for end of financial year. We keep coming back to that word stress, so it can be as minimal stress as possible. For everybody that's logged on, a reminder that a recording of this session will be available shortly on the Guild's YouTube channel. And just circling back around again, if that isn't enough content for you, please check out our PBCN podcast, because we've got more than 120 episodes there waiting for you. It's full of great stories from community pharmacies and industry experts, and advice and insights right across the country, which will help you not only understand more about the world of pharmacy business management, but also the patients that you're going to meet and care for throughout your career. And just one point that I wanted to just reiterate, Judy's put a note in here in the chat that it really is helpful for as many pharmacies as possible to complete what Belinda had on a slide there a minute ago, the Guild Digest survey, because it truly does help reflect the industry and provide you with some benchmarks and some insights to compare your own business against. That's about it. Thank you, everybody, once again, and enjoy the rest of your evening. Good night.
Thanks, Daniel. Belinda, Ben, good to see you guys. Cheers.